to Bitcoin Technical Analysis today with George and Tone. Hey guys, how's it going?
Good. How are you?
Very good.
I'm well, thanks. And all right, we're looking at a Bitcoin chart of yours, George. Tell us about it.
Yeah. So just looking to see what's happened after we've had that blow off top and where we've gone, and we've been consolidating in the key range, which was at 300 to 315 area, and then I drew some fib lines on it to see some resistance. We got above 331. Still below a couple of the moving averages on the 4-hour chart. I think that if we pop above that, we get up to 370. That's going to be some big resistance, but I could see this running up into 400 in the next couple of weeks if we don't fall below this key support area. Um, and I've been leaning bullish here because I've been looking at the weekly, and the weekly has been in a pretty bullish position even after the sell-off last week. The RSI and the money flow index, as well as the MACD, have still been in bull positions. And something significant happened last week. Is we've closed over 300 for the first time on a weekly since December of 2014. So that's a really good sign as well that this 300 range. Hopefully will hold. I guess this week we'll see if it's going to be 2 weeks in a row above it, and that would be pretty good. But right now, I think you lean bullish, but you're always cautious that it's going to fall below. I'd like to see us break above this little range we're in right now up until like 340s, and then I think we go higher. And then just last but least is a chart of the Chinese OK coin, and I just wanted to show like the volume's been dropping off there. They led us above. They led the rally and they led the downturn, and the volume hasn't come back yet, so they're kind of on vacation. But what's interesting is I put a rate of change indicator in here just to show the significance of that move from the blow off top. It went from like a 60, 65 area all the way down to negative 25 in very short time. That's been some pretty big damage that's been done, so I don't think that we're going to get out of the range that we've been in, which is going back up to 400, between 3 and 400 for quite a bit, and that's because these wicks here are just going to be massive overhead supply now, a lot of resistance above to get up. So that's my thoughts on Bitcoin for now. Going into the U.S. dollar, something we talk about a lot. Just as bullish as you can get, looking to break above this 100 area on the DXY. Actually, this is the U.S. dollar index here. So we're right up at the top of the range looking to break out, and everything's really strong here for the most part. So I think that this continues going higher. I don't see any reason why. And as a result of that, you see Euro, US dollar. Jesus, it's just looking like you're going to start hearing people talk about parity soon. We're getting close to a really critical level, which is that 105 area, which we've got a double bottom at going back to May. But it could break through. It hasn't been able to recover at all. The bombings on Friday didn't help issues, but it's just because it's just very weak, and more QE is probably coming into the eurozone. Plus, you have the Portugal worries and Spain secession worries, or Catalonia anyway, secession worries. And then another chart that's really in a disaster area is the CRB, which is something I look at a lot, and it's just a Reuters-Jeffries index of commodities, and it holds 16 of the most major commodities. This is a weekly chart going back to 1996. As you can see, we're at a place right now where there's this big double bottom from 99 and 2002, and we're right at that level. If we don't hold here, I would think that falling out of the water is just going to happen really, really fast. But we seem to have held after yesterday, and maybe this is a bottom area, but I'm not ready to say that yet. It's just something to note that commodities continue to be really, really, really weak and just getting weaker. But at some point, there has to be a bottom. It's just a matter of when that is and how. And right now, it's just too soon to call that. Shanghai, we talked about this last week. It continues its up move. It kind of had a little correction with every other market, but it's got that nice candle now. It's back above all of its moving averages, and looks like it wants to go higher as well. This is the DAX. It also had that correction rounding top, and then this nice move yesterday. following all other major markets, and it's back in a pretty bullish position. Not as bullish as some of the other charts, but you see the MACD here is still in a bearish zone, but the RSI seems to be, confirming it, not move, but I guess it's going to be wait and see on that. What I really liked was the S&P move we got. We talked about how these moving averages have compressed, and there was going to be volatility, and we got some big volatility the last couple of days, and then you get this big up candle yesterday and a reversal on a bullish engulfing candle. So strong move like that, you would expect this to rally at least back up to the highs of this move, and if not, get back into this range where we have the 1, 2, 3, almost 4 quadruple top, and that's an area that could very much be attacked as we rally into the end of the year and see where we go from there. If we get above that, bull market's on. And then finally, this is from my blog, semantics.com, and this is just bonds, and we talk about them a lot, and everything that's going on with the Fed. And I'm just going to go through a quick couple of charts here that look at the different yield structure and how the short-term yields have really blown to the upside. As you can see here, this is the 1 year, this is the 2 year, and this is the 5 year. And then here is the longer end of the stick, and they're all getting bullish as well. The 10 year, it's a couple of down days. The 20 year down a bit, but still this big uptrend has started again, and the same goes for the 30 year. But I just want to make the point here that while people are starting to call this maybe an end to the bond bull market, it's still too early to do that. And if we look at the forest of the trees, which is we go back and look at the weekly charts of some of these things, this is the 10 year, and it needs to get above 26 before you can really start saying that this bear market is over. For the 20 year, you want to get above 3.25 on the yield, and for the 30 year, you'd want to get above 35 before you can start really saying it's truly over. Those are pretty reachable, but we aren't there yet. And as the Fed gets closer to a rate hike, we'll really see what happens in the interest rate curve. But right now, the short end is pricing in a rate hike, but the long end is still pretty skeptical, even though in a shorter time frame it's moved into a bullish position. And that's all I really have.
Okay, well, thanks a lot. That's really interesting about the bonds. Tone?
Yeah, hey, George, it was really interesting to see that giant spike like a week or two ago in the CRB index. Go back to that. Well, what caused that? Do you know? Did you look into it?
To me, I think it's a misprint because this commodity index holds about 16 of the most liquid of all commodities. So, like for something like that to happen, it couldn't just be one thing. So I'm assuming that wick is just a misprint, but I could be wrong, and it definitely would be interesting to see what it is. But I'm just not sure that it's anything of significance.
Okay, yeah, I was just checking because that really caught my attention when you pulled up this chart. I haven't seen it.
I know. It's interesting that it's there.
Okay, great. All right, what do you got for us today, Tone?
All right, so I'm gonna kick it off with Bitcoin as well. This is the Brave New Coin's liquid index on a daily chart. It's showing yesterday's close at 331, and you can see my support levels right there. We broke the first support level at 315, touched the $300 support level, and rallied back up above 315. Now, if you look at the indicators down below, the MACD and the RSI, I don't think we've worked off the overbought conditions, this unreasonable exponential rise to 500, and we haven't worked that out yet. Now we can work that off by going horizontal for a little bit, or we need to pull back some more. And right now there's really no way to tell. I don't think the price has bottomed yet from this spike for no reason at all, other than hype over Triple M and some of the other things. So I'm still leaning bearish on Bitcoin for a little while longer, though I'm long-term bullish. And those are my levels that I'm looking at. So if 300 can't close, if we can't say about 300 over the next week or two, there can definitely be some more downside. Let me also pull up a weekly chart. I have linear and log. You know what? Let's take a look at linear. I don't remember if I have. No, I don't have many indicators on that one. Let's go to log. Here we go. Give it a second. Yeah, so this is also the liquid index, and this is the weekly, and again the close is of yesterday, and we went overbought a near SI weekly, and that hasn't happened in a long time. So again, same deal. We're a little overbought, and it's reasonable for it to stay flat or go down for a little while longer. But it looks like we have bottomed. We have a clear low in 2015 and a secondary low midsummer. So it's looking good. We're just short-term overbought a little bit. And look at the volume. The volume on the index is higher than the previous bubble volume using the same exchanges from those indices. So that's actually good. That's a very bullish sign going forward. All right, let's jump onto the traditional markets a bit. Let's go into the S&P 500. This is a chart of the S&P 500 futures, and again, the consistent followers of this series, they might know my opinion. I was looking for the S&P to pull back. In all their videos, I was looking for the S&P to pull back to about 250 before going back up and testing the highs. It went further than that, but by 2 days, and that is a huge bullish engulfing, which is a reversal, and now we're above the 2050 in the futures market. So it's looking good. It's hard to say if we're out of the woods. I always like it when things bounce off of numbers that are round, and we also have, this has been resistance that became support. So it's looking good, and we have a reversal pattern. So I can definitely see the stock market rallying into year end, and that has a lot, and the Fed rate decision will have a lot to do with the S&P 500. My opinion of the Fed, they have absolutely no idea what they're doing or when they are going to do it. So I think they look at the S&P 500 a day or two before, and they look at what it's done leading up to the Fed call on rates, and then they make their decision accordingly. So if the S&P does turn around and crashes into the Fed call, there will not be a raise in rates. If the S&P rallies into the Fed meeting, that means the market is accepted of the fact that they're going to raise rates, and therefore they will raise rates a little bit. So that's basically my view on the S&P. Let's jump onto the commodities. Let's take a look at oil. This is oil as of a few minutes ago, or maybe an hour ago. Again, we are flirting with pretty significant support right here at the $40 point. And once that cracks, there could be a lot of pain. And though, again, followers know this is what I was looking for this entire time, for this triangle to just break down. It didn't happen when I expected it to happen, so I did not profit from this fall. I also don't like to see breaks after a significant, like this break of 40 or 45 wasn't appealing to me because it came from such a far distance. So same here. If we break 40 tomorrow, it's not going to be very appealing to me because we are breaking 40 from 48. So that's not how markets accelerate to the downside or to the upside. Now, what I would like to see personally is a pullback to about 45. Treat this as a back test of resistance support, and then from here, or even from a lower level like this level here, and then start the big downtrend. I'm not very bullish on it, and this has to do a lot with the dollar. George put up the chart of the dollar, and it's the same thing. Yes, we're about to break out, but I don't like the fact that we've already gone so far before the breakout. A pullback would be much more appropriate, and this is how people get caught. And again, I'm going to emphasize this right here. I'll put a circle in here. This is how bull and bear traps are made when you have a breakdown after a long move in the same direction. And then you have this reversal handle, which is a hammer. And finally, I saved the best for last, which is gold. Again, regular followers know how bearish I am on gold, even though I personally wasn't able to profit from it due to badly timed trades. Um, this right here is pretty significant break of support. But again, look how far it has to go to break the support, and I don't really like it. You have a reversal. You had a reversal here. Um, you could have played it to the upside, but it was very, very short. It didn't even make it to 1100. Now we're breaking down. Um, I think gold's going to bounce soon. I mean, this is just too much. It'll bounce temporarily. I don't think the bottom has been made. I'm looking for the bottom to be under 1,000, and we're not there yet. But again, the more consecutive down days we have, the more the rubber band is stretched, the more it's likely to bounce before reemergence of the bear in precious metals. All right, I'll finish it there. I'm not going to get into silver today, but whatever I said for gold goes for silver.
Okay, thanks a lot, Tone. That was great. Okay, I'm going to start with the DAX, which George briefly covered. I got a 4-hour chart just to show what's been going on intraday a little bit, and yeah, you can see there's been a real big uptrend, and it's busting out of the 4-hour Kumo just about. So if that continues, then that could be a signal that it could challenge 11,000 again and above. And I think the DAX typically really likes cheap euro, and that's what we've got right now. Moving on to gold, what Tone just covered, also on the 4-hour, just to get a little look at what's going on intraday. You know, it came up and it tagged the 4-hour cloud there at 1096 about, and then it just really tumbled down. So as Tone was describing, we could see another pullback to test that area again over in this Kumo cloud. It seems to be a pretty big resistance area on the 4-hour. I think that could be the case. You can also see the wick at the bottom of this candle here. And moving over to Bitcoin in the 4-hour, yeah, we can see that right now we did have some up from the 315 area. This is Bitfinex, and it also tagged the 4-hour cloud. And since then, it's just been kind of choppy. Playing a range here and consolidating within that range. And we can see that a little closer here at the OKCoin BTC CNY chart, where the last hours the bands have been tightened. There's the lower band has been tested, and that held up, and now it's just kind of consolidating sideways. So we might see that for a little while longer before we see a clear trend in Bitcoin, I think. And that's all we've got today. Thanks a lot for watching. Make sure to subscribe to the World Crypto Network. Also, make sure to check out all the information in the description. I'm also going to put more information about the indexes and instruments that we cover for all of you that are new to these markets and want to find out more about them. Thanks a lot for watching, and talk to you next time.